Hi guys, it's Bullitville Academy here again. In today's video, I'll be walking you through the trade I took on GPP, on Eurusd this week, and I made some quite good amount of money on the trade. But before we dive into that, I observe that most of us watching this video currently are not subscribed to our YouTube channel. So if you are on that list and you are not subscribed, please, I want you to subscribe to the YouTube channel and turn on the notification buttons so that you can always receive notifications whenever we drop a new video. That is one. So, and whenever you are watching any video, please make sure you like and also drop your comments. Tell us what you feel about the video. And if you also want us to make a video on any topic of your choice, please, you can actually drop it in the comment section. Alright, so without much ado, let's dive into the chart. So in today's video, I'll be walking you through the trade I took on Eurusd during the week. Okay, so this is Eurusd. Today is Friday already, and so I took a trade on Monday, and I also took another trade on Wednesday. So I took two trades, and then I'll be explaining to you why I took these trades on Wednesday. And once we are done with this, we'll also go to the good currency pair. So I would like to show you one or two things. So, but before I explain to you why I took this trade here, let me quickly explain something to you. Please, I would like us to listen attentively. Right. So, in Forex, as we know, we have our supports and we also have our resistance. For instance, let's assume this is our support and this is our resistance. So whenever you see price come to a support level, and couldn't break out of this level, then goes up, then comes back again another time or another day, and once it gets to this level again, it couldn't break out of this level. It broke out a bit, then went back again, went up again. You understand? So whenever price comes to a level or a zone, so this is a level, you can either call it, this is our demand level. Understand? Some people call it support, demand or support, whichever one they want to call it is fine. Demand. Okay, let me change it to capital letter. You have the demand, or you want to call it support level. So at the demand or support level, you are buying. You understand? So this is our demand level. So once price comes to this our demand level or support level more than once, that is, price came to that level and price mitigated the level, or price couldn't break out of it, but instead price mitigated it, then went back up, then came back another time to the same level, maybe the same day or another day, came to mitigate the same level again, then couldn't break out, or it gave us a first breakout, then went back into, went back up again. So that means that this level is a key level. That means you should take note of this level. So you can call it either a key level, you can call it either a key or psychological level. Some people call it key level, some people call it a psychological level. You understand? So you can either call it a key level or can call it a psychological level. And the reason for that is just letting you know that this level is an important level that you should take note of. So once price comes to it or to mitigate a level more than once, or a support level more than once, then that means that level is a key level that you should take note of. You understand? You can see price came to mitigate it once, came another time to mitigate it a second time. So this is to let you know that there is high probability that price might come later in the future to mitigate it again in the third time. And once price comes to mitigate it and couldn't break out, then that means it's already giving you a green light, or it's already letting you know that will be after once price mitigated and couldn't break out. That means it's already giving you, or it's already telling you that it is high time you bought from the market. You understand? And the same thing also happens at the resistance level. You know, just as the way we have the demand or the support, we also have the supply. Please make sure you are following, or the resistance level. So, and at the support and resistance, so that's the same thing we have at the support or resistance too. And you see, so now once price comes to mitigate a supply more than once, can you see? Once price comes to mitigate a support or a supply level and couldn't break out of it more than once, then that is to let you know that this is also a strong key level or a strong psychological level that you should also take note of. Understand? And once you have observed that, what the price or the market is just trying to let you know that this level, you should mark it out. Understand? So that once price now comes again and is giving you the same pattern, that is couldn't break out, then it's already letting you know that okay, this is an opportunity for you to what? To sell. So once it comes again and mitigates it and couldn't break out of it and it start going down, then you start looking for selling opportunities. You understand? Now this can be on a higher time frame, but you know that once it's on a higher time frame, maybe in daily, weekly, or 4 hours or 2 hours, you don't want to enter, you don't want to take your entry. You understand? So what you want to do, you want to come down to your either 1 hour or 15 minutes, depending on the type of trader that you are. Understand? Then you come to your 1 hour or 15 minutes. Then you now look for your selling entry from this supply or resistance level. Understand? And you make use of your strategy. Then the same thing too for the demand level. So you come down to your either 1 hour or 15 minutes or 30 minutes, depending on the type of trader that you are, or even 5 minutes. So that you now look for a buying opportunity depending on your strategies that you use. Someone like me now, if I'm to either take a buy or sell, once I discover that okay, price has mitigated this level more than once, twice, and it's coming back the third time, and it's already giving me bullish intent. So I want to come down. Number one, I want to look for a break of structure. So the first thing I want to look for, number one, please let's listen, a break of structure. That's the first thing I want to look for. Understand? I want to look for a break of structure. Then number two, I also want to look for candlestick pattern. I want to look for candlestick pattern. So my number two, is going to be liquidity or sweep of liquidity. liquidity sweep. So those are the three things I want to look out for. I want to look out for a break of structure, liquidity sweep, and candlestick pattern. Understand? So once I've been able to get these three things, then I'll be able to take my entry level on either the supply or the demand level. You understand? So it is as simple as that. As simple as that. Once you remember that there is a level that price has mitigated more than once, you want to take note of that level. You understand? Whether it's support or resistance, that's the first point. Then the second point is you want to take note of it on a higher time frame. Then you come down to your lower time frame. So once it comes again to mitigate the level and it's already giving you a bearish intent or a bullish intent, there are three things you want to look out for. You want to look out for a break of structure. You want to look out for a liquidity sweep. Then you also want to look out for a candlestick pattern. Alright. Okay, I think that is clear enough. So now I took these two trades on Eurusd. I took both trades on Eurusd during the week. This is on a 1 hour time frame. Can you see? So there are some things I actually saw. Let me remove this so that at least it's going to be clear. Okay, so on this day I observed that we had a level here. Observe that we had a support level here on this chart, so we had price coming to mitigate this level. Please, I want us to pay rapt attention. So we have price came to mitigate this level. This was on Friday. Understand? Then when the market opened, price came back again to also mitigate the level again for the second time. So, and when he opened the same day, it also came back to mitigate this level again. So that means price has mitigated that level 3 times. Can you see? Price has mitigated that level 3 times. It was at the 3rd time I had to take the trade. But the first thing you want to do is that you want to look at the structure. You want to look at the structure of the market first. You get? So looking at this from the 4-hour time frame, it was clear that we're in an uptrend. Can you see? On the 4-hour time frame, it's very clear that this is an uptrend. So that's the first thing. You want to look at the structure because your analysis must align with your structure. That's the first thing. Then once you have been able to ascertain that, so after I was able to discover this, the next thing that I did then was, then I went down to my 1-hour time frame, and that was where I was able to spot this my psychological level or my key level that I spoke about. So number one, we know that we are in an uptrend, so whatever we are doing, we are buying. So we are not counter trading, you understand? So in an uptrend, we are only looking for buying opportunities. You are looking for buying opportunities. So now the first thing I spot was this level, like I said, this psychological level here, because you can see that price has mitigated this level once, then went to the upside, came down again. This was the second time. Understand? So when I saw that price has mitigated this level for the first time and the second time, so when it came back again to the third time, you understand. So I was already waiting. Immediately got to the third level and it's already giving me a bullish intent. So I was already preparing to enter my trade. So when I discovered this, then I came down to the 15 minutes time frame. So I'm an intraday trader, so I take my entry on 15 minutes. You understand? Take my entry on 15 minutes time frame. So I came down to 15 minutes time frame to look for entry. Because when price came to mitigate it the third time, it started rejecting the level and it's already giving me a bullish intent. So I think I went down 5 minute time frame so that I can be able to get my entry very clear. So these are 5 minute time frame. So I came down to 5 minute time frame so that at least I'll be able to see the entry very clear. And now once you're on the 5 minute time frame, you have something like this: lower low, lower high. See, lower low and then lower high. You have your lower low, then you have your lower high. You have your lower low. So this was the last low that swept or that cleared this low here. Then we now have your lower high. No, after this lower low, then you have this higher high, because this new higher high has broken this last high here. You see. So this new high now has broken this last high here. But when this high broke this high here, you understand? When this new higher high broke this last high, you saw that it broke it with a wick. You can see that it broke it with a wick. So I was actually looking for a break that was going to close with the body of the candle, not just the wick. So you can see that when we had this new high, so I think I didn't enter the market yet, so I waited for a retracement. Can you see? Then we had a new high. Can you see now? So we had a new high. This is now the proper break of structure because the body of the candle closed above the last high, and it did not just close with a wick, it closed with a body. Can you see? So it closed with, we're having a body here, can you see? It's closed with a body. The first break of structure here, there was a break, but it closed with a wick. Understand? So when it broke out, it came back and closed beneath it. So I was waiting for a candlestick that will break out and close outside of it with a body, and you can see that this one is a perfect one. So immediately we had this, I knew that okay, that means the structure has changed. You understand? So it is high time for me to start going up, and that was how I was able to take my trade. So then I went back to my 15 minutes and I was able to take my buy. So I went back to the 15 minutes and I was able to take a buy. So don't forget, like I said, the first thing you look out for the structure, because once the structure is wrong, then so the market cannot be buying and you are selling, so you won't make any money. Instead you make losses. So the structure, you understand? Then number two, you want to look out for liquidity sweep or break of structure. You understand? So then I came back to my 15 minutes. So immediately I came back to my 15 minutes, then I was able to take my trade. think I took the trade from here. So I took the buy trade. I took the buy trade from here. So I risked 20 pips, above. I make sure that the stop loss was below. Now this was the last low, and this low is meant to be protected. Since this was the last low, this low is meant to be protected. So I took I make sure that my stop loss was below protected low. So I make sure that my stop loss was below the protected low, because price might want to come back, to just to play around it. So I make sure I give my stop loss a breathing space. Then I was targeting 1:3. My target on the trade was 1:3 on the trade. You understand? So I left the trade till the next day. So I think I closed around this place. So it was a swing trade for me. It was just for one day, and I just left it for a day. So I closed around. I couldn't get the 1:3. I think I got 1:2. So I left around this area. You can see the market had to retrace back the next day. You understand? So that was how I was able to get caught this trade. And the same thing to happen here. Now if you look at the one I also took here too, that was the same thing I explained here. Was the same strategy I also used. Now this is a protected low. You can see that price has come to mitigate this level once, twice, the third time. Okay, couldn't get here. This was the fourth time. Now this was now the fifth time. At the fifth time, when it got here and it started giving me what's it called now, a buying intent, you can see a bullish intent. I also entered a buy here, you can see. So it was the same thing, and the structure will always repeat itself, but the pattern will always repeat itself over and over again. So immediately got here, I knew that okay, this was going to buy. Understand? Me looking at it, although I didn't wait for a break here, a break of structure here. Oh, let me see. I'm not sure I did that, but I was a bit certain. Although, like we all know, there's nothing like certainty in them. Okay. I think I came down to the lower time frame. So you can see where my entry was. I came down to the 5-minute time frame so that I could see the market very clear. So if you look at the 5-minute time frame, the entry will be very clear. So you can see lower low, lower high, lower low, lower high. Can you see? Then lower low. Now this was the last low that broke out this was the last low. And after this low, the market couldn't give us another low, but instead we had this higher high. But this higher high was higher than this with just a week, but I was looking for a body. So we had this higher high, then we had higher low. And you see there is a change of structure here already. Higher high, higher low. Then we now had a new high that took out this last high. So immediately we had this. So I knew that okay, I think it is high time for me to take my buy. So immediately we had it because we had this high. Then I waited for a retracement. So I waited for a retracement. And you see, before I now entered my buy. Understand? So I waited for a break of structure here. But if you look at what we have here, this was the first break of structure. Let me zoom in so that I can. This was the first break of structure. But you see that the candle, it was just a week. It broke out of, it took out this last high, but it went back and closed under this level. Can you see? So since it broke out with just a week, it's like a weak break of structure. So I was waiting for another break of structure, then we had the other one. Then you can see the second break of structure here. This one closed with a proper candle and even closed above. Can you see? Closed with a proper candle. Closed with a proper candle, and it closed above it. So immediately I saw this, I waited for a pullback. Understand? Now for the pullback, some people might want to use just wait for a pullback, maybe like 50% of the pullback. You understand? So once you have gotten this is now going to be your protected low. This was the last low here, so this is going to be your protected low. Please, let's pay attention. These things are very simple. So this is going to be your protected low. Protected low means that the low should not be taken out. Understand? A protected low. Understand? So this was now my protected low. Can you see? Understand? So protected low. Then I waited for a pullback. So a pullback. So immediately I got the pullback, like almost 50-61%. Then I was able to take the trade. You can see that even after I took the trade, the price still came down. You can see it still came to play around my stop loss area before it started going up. So that's why whenever you are setting your stop loss, make sure you set enough pips. Don't set tight stop loss, because once you enter the trade, price might not go your way immediately. So once your stop loss is very tight, it might take you out, then go. Imagine the trade taking me out, then later going my way. So it can be very painful. You understand? So once you take your stop loss, make sure that you have enough space, breathing space. For me now, I make sure my stop loss is no more than 20 pips, no matter the size of the account. So I make sure I wait patiently. And another thing you want to do is that in forex, patience is a virtue. You don't just rush any trade. That's why I make sure I wait very well. I wait patiently. I make sure that there is enough liquidity sweeper, because this place where I bought now, a lot of people too want to buy. You can see this place where I bought from now. A lot of traders too would have wanted to buy from it, because they are waiting for it too. And the market knows what it's doing. So if everybody is buying at the same place, the market can come and take everybody out first. You can see that we had a liquidity sweep here. Even after I entered, it came down to take out this last low here before it now started going up. But thank God I had enough breathing space for my stop loss. So that was how I was able to catch both trades. That was how I was able to catch both trades, and I was able to make some money from this. Understand? Then another example I wanted us to look at is gold. So today is Friday already. So I didn't enter this trade on time. I'm waiting for a pullback. So you can see that this is on a, let's go to 4-hour time frame. Now gold has been dumping. Gold was actually buying for the past 1 month or so. Gold has been buying, but recently now, like 1 week now, gold has been dumping. Gold has really been dumping. So now what I did was that since gold has been dumping, the same strategy I used for the Euro, that was the same thing too I used for the gold. So can you see what we have here? So let me come down to the 15 minutes time frame. So since we're in a downtrend, we have lower highs and lower low. So I already set my trade. I anticipated that price was going to come back at this level and sell, and that was the thing that happened there. So I caught this sell on this trade. Price came to this level and sold. That was on Wednesday. Then yesterday too, on Thursday, price came back to that same level. Can you see? Now it sold a bit, then came back. This one took me out, so I took a loss. I lost 1 half on this trade. It took me out. So now there's something I want to explain here that is very important, and it's the same thing I was explaining to. Now this is our resistance level. Can you see? This is our resistance level. And don't forget, at the resistance level you are selling. You understand? Now this is a downtrend, and since this is a downtrend, this is our resistance level. So from what I have observed, you can see we had the first touch here. Please let's listen. This thing is very simple. We had the first touch. Price got here, but price couldn't break above it. We had a dump. Then we had the second touch. Price got here. It broke above this level a bit. This is like a fake breakout to deceive people to buy. Then later came down to take their stop losses. It dumped again. Can you see? Understand? Then this is the third breakout now. Can you see? Price came back again the third time. It broke out to deceive buyers, and now it has dumped back. Understand? And I'm very sure that the price is still what? It's still going to dump and get to this level to clear this low. Today is Friday. So now price has dumped a bit. So we are having like a pullback. Then price can get to this level, maybe 61% Fibonacci level or something, or 50%. Then it's going to what? Continue dumping. But my point here is that this is a resistance level, and to buttress more on the Euro USD trade I took, that was the same the same strategy too I was using for gold. Since price has mitigated this level more than once, this was the first time, this was the second time. So I was anticipating that once price gets here, it will also dump, and you can see that is what is already happening. Price has gotten to this level again, and it has dumped. Although there was like a first breakout here, and that's why you need to be careful as a trader. You understand? So everybody is aware of this, that okay, this is a resistance level, and they are also waiting to buy here. But you can see that price will not just buy immediately. You can see price will not just buy. So imagine price got here and started going up. So a lot of people would have entered a buy position here. But you can see and price came down and it took them out. Then it started going up again. People would have entered again. Then it came down. Then you can see. So you have to be very patient. So these are tricks the market will use for you. But once you are consistent, once you are consistent and you are back testing regularly, so it should be very hard for you to fall for those tricks. And also if you are using a very tight stop loss, you understand? So I will advise that you give your stop loss breathing space. Don't use tight stop loss. Give your stop loss breathing space. You understand? So that is that for that. Okay, and there was something I forgot to explain at first. So let me quickly explain that. So whenever you have a downtrend like this, lower low, lower high, lower low, lower high, lower low, lower high, then you add lower low, then you add this. So once you have something like this was the last high and this was the last low. Now this new high now has taken out this last high, so it's already telling you that there's a break, or Okay, now these highs are protected highs in a downtrend. Understand? But now we had a new high that has now taken out the last high. So once you have something like this, it's already giving you a signal that there might be a change of character, which people call CHOCH, change of character, or MSS, market structure shifts. So change of character or market structure. So once price does something, that means these highs now, they are protected highs. But once price comes to take the high out, so there's a 50% chance that there might be a change of character. So once price now comes back, and it doesn't take out this low, and it does something like this. So price can either do two things. It can come back, so maybe to 50% or 61% Fibonacci retracement, then shoot up. So once this happens, then this is a change of character. This is the first instance. Now the second instance can be that price can come down and take the low and continue selling. Yes. So these are the two instances. So this one can just be a deceit. At times that there's we are selling, the price can come down, price can now go up to take out, price can just come to take out all this liquidity, understand, then continue the downtrend. And there are times that price can come to take out the last high, and after taking out the last high, then we have a pullback. Understand? We have a pullback, then it shoots up again. So once we have the first break and we also have the second break, then that means it's telling you that this is a change of character, or your market structure shifts. And the same thing too happens for a bullish trend, high, low. A push, a pullback, a push, a pullback. So in a bullish trend, the lows are protected. Let's see. But once price comes to take out this low, I see price came down. Now that means price has come to take out this last low, which is protected. Now once this happens, there are two things. It's that we have a change of character. Now, how will you know? Once price comes back to maybe 50% Fibonacci and dump, then that means we are already having a change of what? A change of character, because we are having a break of structure to the downside twice, once and twice. Understand? And like I said, price can still dump to take out all these lows, all these liquidities, then still come to take out this high. Can you see? So the more you trade, the more you experience these things, and the more you know what to do. So the more you trade, the more you know whether this is either a change of character or it is just a manipulation, because the price will always manipulate traders. You understand? But the more you spend time, that's why consistency on the chart is key. And I will also emphasize it. Whenever you want to trade, make sure that if you are coming to the trading space, you make up your mind that you are going to give yourself to trading. It is not easy, and it's not going to be easy at first, but you make sure you are showing up always. Yes, you make sure you are showing up always, because that is where you are going to now gain the experience and you begin to get conversant with the patterns. But if you are not showing up consistency, then you'll not be able to get the best out of trading. So this is where we are going to be stopping in today's class. So if you have any question, please drop it in the comment section. I'll be glad to reply you. And then please, if you have not subscribed to my YouTube channel, this is my YouTube channel. You can see we have a lot of videos for you, both short and long videos. So these videos has been done for you to digest them. And I tell you, if you go through the videos, they are going to change your trading life forever, and they are well simplified. You can see we have videos for you, and I'll continue to upload more videos every week. So please, if you have not subscribed to my channel, I want to use this opportunity to encourage you, please, to support the channel by subscribing, turn on the notification button, also drop a like and also comment. Please drop a like and also drop a comment, you understand, so that you can help us grow and reach more people. You can also share the videos too, you understand. And also we have the last video I did too was how I use a candlestick pattern to catch a profitable trade on GBP/AUD. So I also want you to watch the last videos and other videos, every other videos. And we even have there was a 3 days free training I did last 3 weeks ago. And you can see I have the one for day 1, the one for day 2, and the one for day 3. It's a free training for beginners, free of charge, and we had a lot of value there, and we had questions and answer to section. So I also want you to go through it, you understand. Alright, so this is where we are going to be ending today's class, and I'm going to be seeing you in the next video. Bye.